I think one of the very interesting things about the industrial segment, when you compare it to the other big property segments, is vacancies are down to levels we haven't seen in several decades. Apartment did very well and came to very low vacancy rates, but now those are beginning to rise in most markets nationally. And office and retail never came down to the kinds of vacancies we've typically seen. But really, this combination of the move to e-retail and the need for industrial space there, the legalization of marijuana in more and more states, cloud computing are all new ingredients that have really pushed fundamentals to a good place on the industrial segment. Industrial market is having a great year in 2018. If you look at pricing, it's up over 6%. If you look at volume, it's up over 20%. We expect when all is said and done at the end of the year, vacancy rate is going to be down 10, 20 basis points from its low level last year and to the lowest level we've seen in several decades. And rents are besting inflation by about 2 times. Next year, the big question is what's happening with the economy next year. If the economy continues to grow as strongly as it does and it's not disrupted by things like trade wars, we would expect industrial to continue to do very well. So in our quarterly report, we analyzed the top 45 or so industrial markets, and we identify those that that are doing the best and that we expect to continue doing very well, and those that are more problematic. As it turns out in the most recent analysis that just came out, the top 5 buy markets are all in California. 4 of the 5 of the buy markets in California and Northern California. It's the 3 Bay Area markets of San Francisco, San Jose, and Oakland, along with Sacramento inland from there. And then the other market is LA down south. There's a few different things going on that are driving the strength of these markets. One of them specific to California, or not particularly specific to California, but important to California, is the boom in tech, and that's clearly why the Northern California markets are all doing so well. Additionally, California benefits from trans-Pacific trade and trade with China. And then the third thing, which is the sort of the newer ingredient, is the legalization of cannabis for recreational use in California. Now, California already had medical marijuana legalized, so it may not be as big a boom as some other states like Colorado saw when marijuana was legalized, but nevertheless, this is yet another source of demand for the California industrial markets. One of the biggest risks we're looking at right now is trade war. Trade would disrupt, goods coming in and out of ports, which of course is very important for the coastal California markets, but for the industrial markets in any of the coastal areas around the United States. Beyond the direct impact of a reduction in trade on port activity, it does have the potential of disrupting the broader economy, and that of course would have a bigger impact on industrial, not just in California, but everywhere.